Joining us right now to talk about it is Dan Flax, Neuberger Berman senior research analyst. Dan, what do you think? This is a situation where Nvidia has shown so much more growth, and yet people say that it's still a cheap stock when you look at the earnings that have caught up too.
Good morning, Becky. It's being driven by the innovation and the execution on the product cycles. And so, for example, we'll see their Blackwell platform really begin to ramp later this year and drive strong growth in 2025. But what I think the big story here is really this broadening beyond just the cloud companies into a lot of different industries: automotive, healthcare, manufacturing. Think about drug discovery, digital twins for manufacturing. And so they, along with their partners, are really helping to revolutionize and transform parts of the economy. And so we continue to like the growth story here. And the key a key part of it is they're really empowering developers to keep building on top of the platform.
So the Nvidia halo that we've talked about so much, how lasting is that? How long do you kind of see this holding out? And where do you look when you're looking to kind of trade down the line?
We're looking very carefully at each one of their products and their product cycles. And so we've liked this name, as you know, for a long time, and we're long-term shareholders. And what's happened with Nvidia is that they've transformed. Their history is, of course, as a gaming company, and the technology and what they've been able to do in the data centers has transformed the company. But it's, of course, transformed the tech industry and is transforming parts of the economy. So we continue to monitor it carefully. The competitive landscape remains fierce. And when we think about Nvidia or other technology companies, it really is this ability to keep innovating and pushing on the product cycles. They have to extend into new areas. They have to take significant risk. But if they can do that successfully, most of the time, it drives strong revenue and free cash flow growth.
So where do you expect the stock is headed?
I think the stock can head substantially higher, Becky, over the next 1 to 2 years. I can't give you a specific price target, but what I will say is that you have a data center business approaching $100 billion that I think can sustain healthy double-digit growth over the next few years. Sure, the quarters will be lumpy. There are, of course, cyclical dynamics that impact Nvidia like others. But if they're able to do that, I think over time, this can create significant additional shareholder value from current levels.
You say that you also see value in a lot of these other tech stocks, even if it's not going to be quite the same as what you've seen in Nvidia. But you're citing Alphabet, Amazon, Apple, Cisco, Microsoft, Motorola, and Qualcomm. Let's run pretty quickly through some of these. Alphabet, what's your take?
Sure. We're seeing them capitalize on generative AI. We've seen in the last couple of weeks that they're transforming search. They're creating more value for users on one side, advertisers on the other. And I think their cloud platform's underappreciated. Amazon, they're continuing to redefine the consumer experience. AWS, their cloud platform, remains healthy. With Microsoft, you're seeing continued strong growth in Azure, their platform. If I look at some other names, Motorola Solutions is an example. They're a leader in public safety, and they have very strong growth prospects in areas like video. Think about the command center and 911 centers. A lot of them can't receive text and video. That whole area needs to get revolutionized and transformed and modernized. Qualcomm, they're a key enabler of intelligence, connectivity, and security in low-power environments. Think about factories, cars. All of that will get connected, and Qualcomm really sits at the heart of that transformation. And Cisco is a contrarian name that we continue to like. I think they're making good progress on embracing the cloud, transitioning to more software, more recurring revenue, and we think the earnings over the next 2 to 3 years will be better than the market thinks.